DeFi can either be like an art piece up on the wall where it's kind of like the center of attention, or it can be something like the rug that kind of like pulls the room together, right?
GM, good morning and welcome to the Milk Road Show, the daily crypto show that makes you feel like you're in the room with the top 1% without needing a venture fund or a Rolex. I'm your host, LG Doucette, and today is Tuesday, October 20th, 2025. We are joined today by Kash Dhanda, the COO of Jupiter, one of the biggest products, the biggest exchanges in the space. We are going to discuss today the DeFi bull case. Is there real growth ahead for DeFi? Can it grow beyond what it is? Or are we honestly just reshuffling the same dollars and users in the space? And I want to ask him at this very crucial week, like we do many guests, we want to know, have we topped, and how a top 20 protocol in the space feels about that, how they approach these narratives of cycles or not cycles or liquidity and all that. And of course, I want to talk Jupiter as a longtime Jupiter community member, how they plan to win from here, all the new products that they are releasing, and also why they are about to burn potentially 2% of their supply, which is coming up. So we're going to get the scoop from him. And for reference, if you don't know what Jupiter is, they have 8 million wallets using their exchange. They did $243 billion of volume in Q3. They have, I think, a top 15, maybe top 10 highest total value locked TVL across all apps in crypto at $3.5 billion. They're in like the top 5 in 30-day revenue, number 4 in 1-year fees. These guys are huge, and they just partnered with somebody that maybe used to be their peer or maybe their rival with Uniswap, and now they are bringing Solana and Jupiter over to the Uniswap exchange. I'm so keen to hear from this guy. I'm very bullish on all the things that we're going to talk about today. So let's get into it. But before that, for our YouTube listeners, please subscribe, hit that like button, drop a comment below. And for our podcast listeners on the app or Spotify or wherever you are, listen, 5-star rating, give a little comment too, be like, I love LG's voice and the chaos he brings to the episodes. Please put that down there because it'll help us a lot as we grow the show. Today's episode is brought to you by Gemini Credit Card. Turn your everyday spending into Bitcoin stack sats without even thinking about it. Bridge, power your business with instant stablecoin payments, no friction, no banks, just global finance made simple, and Figure Markets. Earn solid returns on your cash because sitting idle isn't a strategy. Let's get him out here with a background that is infinitely better than mine. Kash, what's up, man?
How you doing, LG? Thanks for having me on, man.
Dude, the room that you're in is so calming. Looking at it, it's beautiful.
Everything that comes out of this screen is the opposite of calming. So it's useful to have an environment. You're getting screamed at on Twitter all day. I need a little Zen background to compensate.
Dude, what is the vibe for you these days as you go through? I'm sure you guys have incredibly busy days right now, especially like the chief ops man. You must be incredibly busy. Do you have time to sit down and be like, I'm bullish, I got to zoom out, like I got to really get my head out of the weeds and think about that art industry is going to continue to grow? Or is every call just people screaming how bullish they are? What's that like? What's that like for you?
It's very useful. So I will be honest, I don't really trade. I don't really pay attention to the charts in general, although I have some opinions here and there. But yeah, every call, I mean, as I was telling you, this is my 14th call of the day. And, at least like 6 or 7 of them were with outside partners, and every single one of them was incredibly bullish because it's like, names that your viewers definitely would know, but that I can't talk about right now, will be like, hey, we want to do corporate debt on chain. Let's partner. How do we figure out how to make that happen? Incredibly bullish. We talked to, like giant funds that are just starting to dip their toes into actually getting on chain, credit funds that are like now exploring like on chain yields. Like every conversation I have does make me more bullish, even if I'm not looking at the charts and the prices specifically.
Wow, you can't tell us. And listen, Milk Road listeners, 14th call, that's his lucky number, okay? Kash told me that 14 is his lucky number. So being the 14th call of the day, he specifically planned it this way so that we were the special ones.
I had to cancel 2 meetings before this actually to make sure.
He's fresh, he's ready to go, man. Okay, no, let's actually get into it because, I mean, obviously you can't give us some of those goods, but out of all the calls you're having, everything, outside, I think it's smart you're not looking at the charts. I wish I didn't have that disease. Everything in crypto right now, what has you most excited?
For me, it's really 2 categories, if I can cheat and have 2 answers here. I think the first one is definitely new asset issuance and seeing a lot more high quality assets coming on chain. I think there is an argument that one of the things that's held DeFi back is actually not the technology and not even the liquidity necessarily, but the lack of attractive assets to bring that liquidity on chain. And increasingly with both RWAs and more mainstream players launching assets on chain, I think that's starting to change pretty quickly. And I see the space growing dramatically as a result of that. The second thing I'm really excited about is credit. As I mentioned, so at Jupiter, we have a lending product called Jupiter Lend that I lead myself. And it's just really opened my eyes to how much liquidity there is that's looking for yield. And I think once that yield is on chain, it becomes very sticky and ends up staying there in some fashion. And so the types of use cases I'm hearing on that side, again, incredibly exciting. People not just putting their treasuries on chain or putting some portion of the treasuries on chain, but even kind of like creating entirely new use cases. Huma Finance does a great job with payment financing, for example, where people can get access to cheaper capital than they get into the traditional world. And so that's bringing people on chain as well. So those two things coming together, more high quality assets and then more liquidity coming on chain looking for yield, I think is a very potent combination that's going to lead to a lot of dramatic growth.
Are people ready to do that? Like so you're saying that there's a lot of like maybe institutional liquidity capital that is waiting for certain assets that they can use on chain that aren't currently on chain. Is that basically what you're saying?
Yeah, or even new assets that are on chain. So certainly there are some that like the assets that they would want are not necessarily on chain. So let's take like the most kind of cliched example, which is tokenized equities, right? There's certain problems with the designs of current situations and those teams that are working on it. Shout out to the guys at Backed who are awesome partners and doing really cool things. They're getting better every day. But it's only a matter of time until a large percentage of the trading volume of traditional equities is happening on chain. It's 24/7. It's much easier to move capital around. It's fully auditable, blah, blah, blah. And so I think that's going to help bring some folks on chain. But in truth, what's so surprising right now is folks who just need dollars, quite honestly, coming on chain or need financing of any kind. People who are providing like intraday loan facilities to other clients. It's actually oftentimes cheaper for them to get capital on chain than it is to go to Goldman Sachs, JP Morgan, and so on. And so that's like a real novel use case that you're seeing. There's also like something that happens at the middle of them. So I think I can talk about this. I was talking to the Securitized guys earlier today, and they're just IPOing, which is incredible. And we were talking about they're working on the ACRED product with Apollo, which is a private credit fund, basically put on chain. And what they're seeing is like, hey, they want to see that asset everywhere. It's a tokenized part of the fund, and they want it to be used as collateral in borrow lend markets because they have LPs and people who invest in that fund in the traditional world who can't actually, use that as collateral very easily, but they can do it very easily on chain. Now it's KYC'd and so on and so forth. Like there's wrinkles to it. But that type of asset coming on chain actually also brings in new liquidity. And that's kind of what I mean about how these things kind of merge and mold together.
Okay. So what I'm trying to understand, so is that something that in your opinion is going to grow? Like, how do we measure that? Is that something where over time, like the DeFi total market cap grows as these people plow this stuff in? Is as I guess people like you develop the product and the protocol for people to be able to do that? Is that the expected result? Is that we just have a much larger bag on chain?
Yeah, absolutely. I think there's like concrete metrics that you would look at. Obviously, TVL, I think, is easily going to 10x from here, if not 100x. I mean, stablecoins alone right now, $300 billion or so on chain. I think the Treasury Department came out and said that they expect it to be like $1 to $2 trillion in the next few years. So like stablecoins alone represent a massive shift on, but also other types of liquidity and other assets, I think, will come on. So you're definitely going to see TVL go up. But really what I'm most excited about is the way that being on chain, and Jupiter in particular, is a little bit like Amazon, right? You kind of build the habit to go to Amazon to shop for, in the early days, books. And then they add in, lawn chairs or whatever. And now you're like, oh, well, they also have lawn chairs, so let me go after this. And then, oh, they also have like electronics, let me go after that. And so you come on chain for one maybe specific reason. I want to get yield, or I want to trade this asset that I otherwise don't have access to. And then once you're on chain and that liquidity is on chain, you start doing other things as well, right? Is that to say that like JP Morgan is going to start trading perps? Probably not. But, you talk to a lot of the credit funds that are out there and they're farming funding rates. And so, that I think behavior is going to become more mainstream as well. So it's about getting them on chain in some fashion with a differentiated offering that is literally 10x better. And then once they're on chain, I think you see every metric go up, whether that's app revenue, whether that's volumes, network revenue, and so on and so forth.
How does that work for retail then, or for like non-fund participants? Let's say non 8-figure or even 7-figure or maybe even 6-figure plus people. No, but really, like, what does that mean for us? Does that mean that those firms can then offer products on chain that they can then come down to their customers? Like, how does that actually work for the average person?
The basic insight is that liquidity begets liquidity, right? So liquidity, which by the way, just means money, right? So like the more money you have in a place, the more money gets attracted to it. And markets cannot exist without liquidity in the same way humans cannot exist without water, right? You want deep liquidity. And once you have deep liquidity, it allows you to enable a bunch of different use cases, which make for better products and make for a better end user experience. And to the degree that people are buying tokens and stuff, you would want to have investments that are kind of best positioned to capture that uptrend across multiple different dimensions. And so in practice, what you'll see is that, for example, like yields might compress, which means if you're borrowing, it might be cheaper because there's more supply. That's like one potential option. If you're a retail person, you're just going to have more efficient markets. So, right now trading tokenized stocks, there can be some slippage. They kind of differ from the market price, as we show on juke.ag/pro. And it's not always like tightly tied. As more liquidity comes on chain, that problem gets fixed. And now trading Tesla on chain is really like trading Tesla in a traditional market sense. So the product gets better for you as well. That's how I think things will kind of change on the retail level or on the average user level.
Did you know you can earn Bitcoin without ever buying it? That's where the Gemini Credit Card comes in. Here's how it works. Earn up to 4% back in Bitcoin on gas, transit, and rideshare, 3% on dining, 2% on groceries, and 1% on everything else. Use it just like any other credit card. And you're building a crypto portfolio at the same time. The best part, the Gemini Credit Card has no annual fee and works anywhere MasterCard is accepted. When you're approved and spend $3,000 in the first 90 days, you'll get a $200 Bitcoin bonus. Spend as usual, earn Bitcoin instead at milkroad.com/Gemini. Stablecoins are the biggest use case in crypto right now, but let's be real. Using them on chain is still way too complex. That's exactly the problem Bridge is solving. Recently acquired by Stripe, yep, that's Stripe, Bridge helps businesses send, store, accept, and launch stablecoins instantly. Explore the future of global financial infrastructure at milkroad.com/bridge.
And I don't know if you have an opinion about retail, but I think everywhere you kind of read these days, you see that like young people are getting more into investing, obviously because of apps like, Robinhood are just making it so easy for them to and they're learning. They're using, Gen Z TikTok, finance TikTok is like a thing. And even Tesla's a good example where it's like they've got, a tremendous couple of weeks coming up if you follow Tesla news. Is that something that you think will eventually, like, are those people going to be on chain? Are they going to be trading these things on chain? And will they know that it's on chain even, right?
Yeah, I definitely think the last part of that statement is correct. I don't think that they're going to know that they're on chain. I sometimes talk about DeFi as, there's like a metaphor you can make, right? Where DeFi can either be like an art piece up on the wall where it's kind of like the center of attention, or it can be something like the rug that kind of like pulls the room together, right? Another metaphor is to think of DeFi as invisible scaffolding for the world, right? That's what Swift and ACH and these other kind of financial systems are right now. Nobody knows what they're using, but the things just work, right? And the easy metaphor to add a third one here is like to the internet. How many people actually understand how HTTP protocol works or email underlying protocols work? Very few. Most of them would not even recognize those letters if you told them, right? But they know that they like to read recipes and they like to send emails and they like to go on Facebook. Similarly, I think as DeFi continues to kind of merge into traditional finance and create this kind of unified finance, I think what you're going to see is people are ending up using crypto rails for not just payments, but also investments, also entertainment, prediction markets, sports betting, all of those kinds of things also come into play.
Dude, you're so good. You're so good at your metaphors and your lines, man. You're a great C-level exec. It's a skill. No, I mean that. I mean that in a good way because you deliver them in such a organic, casual way with things like the scaffolding. The invisible scaffolding is such a good oh man.
You're like, all right, I'll use that again then. I
like them now, but every answer you've got good, very accessible metaphors for us to understand. And I think that that's what we need. And I think especially in Milk Road, that's what we're trying to do, right? Is we want to talk to people that are like deeply involved in DeFi, in crypto, in building the infrastructure here, but can't explain it to us in a way that's accessible, whether people listening are hedge fund managers of their own, or somebody who's putting 1% of their paycheck aside, right? Like I think that is, we want to make this accessible, and I feel like you're a good ambassador for all that kind of stuff. But I will ask you something that's a little bit harder to answer. What's the bear case for all this? You know what I mean? Because I think, and we could talk about cycles in a minute and all that stuff, but what, you're painting us a beautiful picture of all this money wants to come on chain. It's going to, be accessible for people, all that. What would stop that from happening?
At this point, when the US government has Bitcoin on the balance sheet and where, my literal grandparents have heard of Bitcoin and crypto, it's hard to put the genie back in the bottle. If I had to paint a bear case, I think it is either that things happen slower than we expect, right? There's that line from Bill Gates that people overestimate what can happen in 2 years and underestimate what can happen in 10. So I think that the change might be more gradual than people are expecting. That's one kind of bearish case. The only other real bear case that exists, I think, is regulatory. Certainly in the US, that doesn't seem like it's going to be a problem for the next few years. Afterwards, we'll see. But again, the hope is that there's enough real value generation that overcomes it. If I had to choose another I think there's a bear case to be made around permissionless public blockchains, right? I think that at this point, even Jamie Dimon, who has been shitting on blockchain since I was a child, basically, they have an internal blockchain that they use to settle, cross-border payments and money movements and so on like that. It does seem like that is here to stay. And then if you see these kind of corpo chains, like Tempo and some of the others, there is a world in which those are the ones that win out, and they're not, fully permissionless, that there's increasing fragmentation of liquidity and users and mindshare and so on, and that we're just not able to figure out the kind of interchain stuff. We're doing our part at Jupiter with JupNet, which we can talk about later, but that would be the bear case. If either regulation goes really far against us or things get overly balkanized, to quote my buddy Ramsey at the Solana Foundation. Those are probably the two main bear cases.
That makes sense. Yeah. Are cycles still a thing, Kash?
Not macro, not overall cycles for crypto. I think that you have these kind of miniature ripples and waves, but it's to ask okay, what is the ocean doing today? Crypto is too big to think of it as just a single thing that goes up and down, right? There are many waves in the ocean, and in one place, the tide is receding, in another place, the tide is flowing. I think that in particular, the majors, so Bitcoin, ETH, and Solana, as they have more of an institutional bid and a kind of longer term investor base rather than a trader base, you're going to see kind of less volatility on those assets is my pretty strong hunch. And I think that's kind of being played out even right now if you look at Bitcoin price and so on. And then for other tokens, it's more up and down. You're seeing some things that are sector specific, ecosystem specific. I do think that it's never been harder than it is today to have an altcoin that's not Bitcoin, ETH, Solana. I think that in many ways, there's too many tokens. Attention is fragmented, liquidity is fragmented. And so there's definitely a general kind of reckoning, especially for a lot of kind of big VC-backed projects. But there is not a single high-level cycle. I think that you'll see individual cycles going on. So, hopefully we're at the beginning of a Solana altcoin cycle right now. Jupe has been doing well. Some other assets on Solana have been doing well recently. Hopefully that continues. But if you're trying to kind of paint the simple picture, I don't think it works. Here's another way to say it. As markets get more sophisticated, easy mode gets turned off. Easy mode was 2016 to 2021. That was easy mode. You buy anything, everything's going up. I don't think that we live in that kind of world any longer.
Sorry, Cardano holders. The easy road's done. No, but you're right. I saw this thing the other day that was the top 50 tokens are not up at all outside of the majors, or whatever that is, that big class of 2021. Even Uni is a good example, right? Where it's and you guys are getting there too, but it's in the last cycle, Uni ran to $40, right? And here, I think that the top for this year has been, I don't know what it is, but it's not 40. It's not close. It hasn't come close.
We've got this funny thing. Sorry, but the last point of this on Solana in particular, which is the ecosystem that I know the best because that's where I spend all my time. There's this interesting kind of barbell that's being created where there's longer term capital holders, especially for Sol in particular, but also some of the blue chip assets Jupe, Judo, et cetera. But the rest of the money is very hot and moves much faster. The velocity of in and out of trades and of tokens has never been as high as it is, and a lot of that was training from kind of meme coin season and so on. And so I think that's the other problem that both traders and projects have to contend with, which is you have to kind of curate your holder base if you want long-term sustainable growth, even if it means not having giant pumps in any individual moment.
Can we talk about that with Solana? And maybe this is more of a trench question, but that's definitely something that I see, especially as Solana's in this kind of battle with Base for being the place that AI is launching, meme coins are launching, creator coins, that kind of stuff. What is that true, Solana, that it's the capital moves too quickly on tokens and better projects have trouble sustaining? What's that culture like?
I think that I don't know if I can say that it's strictly speaking true, because there are a lot of, in particular, Solana OGs who are what I would call patient capital. And there's a lot of kind of like larger funds that now are exploring things on Solana that still won't buy tokens on other networks. And those are, again, more patient capital. But I do think that it's a real problem that, Jupiter and every other project on Solana has to contend with, where, your hurdle rate, which is like if you run a fund at the rate that you have to get beyond in order to start like drawing fees. So that's the kind of like clearing number that you need to get. That's your threshold. The hurdle rate on Solana for any individual token is quite high, because you look at Jupiter, you look at any of these other tokens, you're like, I'll buy this and hopefully this 3x's, well, inshallah, in a very short period of time, but let's call it a year, right? The comparison set is like, oh, or I could buy this other meme coin that just launched and it'll 3x in the next 15 minutes. And so you have to like, your hurdle rate is quite high for a certain segment of users. And so I think what we're trying to do, what Solana generally is trying to do, is bring on more of that patient capital. You want the high velocity capital because it's very good for volumes. It's very good for trading fees. It's very good for Solana's network revenue. It's good for validators. It's good in many different ways. I had no problems with it, but it is a force to contend with, and you have to kind of, as I say, curate your holders accordingly.
Is Pump.fun a net positive or net negative on the space?
I think it is hard to say. I would definitely say net positive for Solana. I think that they've contributed incredible amounts of energy. They brought a lot of people on chain who had kind of been burned in the past. And I think that they've contributed greatly to network revenue, which really matters for validators and just other projects, quite frankly. Like Pump has materially helped Jupiter in the sense that they were a great place to issue tokens. A lot of people wanted to trade those tokens. Most of them traded those on Jupiter. So net good in that sense. Excuse me. I think the part that people talk about it like, hey, it churns people out, or that's, that's like buying cigarettes or something like that, like you're kind of killing your user base. I don't know how much I buy into those arguments. I think that obviously it is partially true. If you just look at the number of winners on Pump versus the number of losers, that's kind of skewed in one direction. But the same is true for many other industries. And so I think that it's maybe an unfair comparison. So I would say net, you bring more people on chain, you kind of usher in this era of social asset issuance that I think is very interesting. You make things fun again, and you help make everybody else more money on the ecosystem as well. From that perspective, I got to say, pretty good.
And I agree. And I don't know if I ever had a chance to express my opinion on this. So I'll use this podcast as my platform for a second. Is that, I'm from the 2020 DeFi, 2021 NFT class. And a lot of us have always said that, things like NBA Top Shot or other NFTs, it's like those are the tuition to crypto. And now we're here, and, we've had highs and lows through the years, but now we're fully involved, and we have this opportunity to invest and make money and whatever else it is that you want to do in crypto. And I think maybe for Pump.fun, even though it's that percentage of winning wallets versus losing wallets is pretty skewed. Maybe that's what it does, right? It's the only thing it's one of the only things that's penetrated through to the mainstream media. You've got Black Mirror episodes making fun of Pump.fun, that and prediction markets, right? Are the two things that it's like, new primitives for gambling or for investing or whatever investor we're going to come up with a new term for that. Quasi, it's not quite a roulette table, but you need some skill. But I think that inevitably that'll lead. I think it does net new users, and maybe they lost a couple $1,000, but maybe they've still been red pilled. Right? That it's like, well, the opportunity's there for them, and maybe they're going to come in, because that's what happened in NFTs, right? A lot of people came in and got destroyed. Maybe never came back, but some stayed, some stayed and became builders. Some stayed and became builders in the space and participants and grew in other ways.
I think there's a real clear argument to be made as well that Pump and what they offer, or just general kind of trading of meme coins, what it offers is entertainment, right? And as capitalism continues to progress, everything can and will be financialized, including entertainment, right? And it is for many people the case that if I can add some money to something, it'll make it more exciting and I'll get more juice out of it. And so if people are voluntarily and consensually understanding the kind of risks, putting money in and increasing their level of entertainment, I don't think that's any worse than Netflix, where people will spend 18 hours on a weekend just binging and not working out or whatever. I don't think it is fair to blame the platform for what they're offering in that sense. It's entertainment. That's great. And to the degree that it helps push forward the rest of the space, as you say, then even better. And I think that Pump has done that. What's
worse for society, Pump.fun or Love Island season 8 or whatever? Or what? I don't even know what people watch on Netflix, or Bridgerton or something. You say, which one's more brain rot, Pump.fun memes or season 6 of Bridgerton? I don't know. If anybody knows what that is, listen, that's not my show. That's somebody else.
I think my wife watches that, so I'm going to say
that's the excuse. Yeah. I walk by the TV, I watch it for a minute, and then I'm like, I can't. I gotta go to the trenches. Sorry, sweetie. Okay. Speaking of trenches, let's. I think a good segue to Jupiter. And I wanted to make sure I asked you this, and I forgot to mention that I was going to ask you about this. So you can answer as you please. There's a lot of things to talk about Jupiter, but I cannot forget to ask you, what is the deal with the Uranus token?
Oh, listen, I don't have too much to say on that one, actually. So Uranus, for people who don't know, it is a token that came out of Jupe Studio, which is our own kind of community creation platform. It looks a little bit like a meme coin platform, but it's basically the opposite of the other major meme coin launchpads that are out there due to a lot of the mechanics. Like 50% of the LP is locked for a year to ensure long-term alignment. There's on-chain vesting, and there's a bunch of other bells and whistles that hopefully create more alignment. It's an experimental product. And Uranus has been the biggest community that has emerged out of it. I will say my mentions on Twitter are filled with either Uranus the planet or plump derrieres, shall I say, which is not ideal.
It's a great meme. It's a very crypto meme. Especially for Jupiter, in the Jupiter ecosystem, it makes a lot of sense, right? As another planet.
Yeah, that's right. Yeah. And so shout out to Meow and YK and Jerry and the rest of the studio folks who are kind of pushing that one forward. From what I know, it's a very active community and a lot of funny things happen. I'm personally not as involved on that side, but always going to support.
Maybe we'll get Meow on. We have a separate DGen channel that we did a podcast for in the past before I transitioned to this. So maybe I'll get Meow on specifically for a Uranus specific episode, and he can tell us all about what happened there.
I think that he'd be very, very happy to do
that. Let's get more serious. Like, actually talk about real Jupiter stuff. So you guys put out your Q3 update just the other day, your token holder update. Outlining basically like all the amazing products that you guys have built, all the stuff that you're growing, and some of the major updates that you guys have made. Cash, maybe without spending too much time diving into that, give us maybe the top 2 or 3 things that we need to pay attention to on Jupiter right now that are going forward for the next year.
Absolutely. So indeed, the Q3 report came out. It's like 30-ish pages, I think, of like pretty in-depth stuff. So yeah, if you want more details, go check that out. You can find that on our Twitter and elsewhere. But for Jupiter, I think our biggest problem is that we have like 12 revenue generating products. Like we really are a DeFi super app fundamentally, right? People maybe know us as a DEX aggregator, but we also have the number 1 perps platform, the number 2 lend, one of the top mobile wallets, number 1 portfolio, et cetera, et cetera. So picking just a few to focus on is tough. I would say there's maybe 3. Can I take 3 instead of 2? Is that all right, LG? All right, cool. So first is, I'm biased when I say this, but Jupiter Lend, I think, is a major one for us. We launched it just in Q3 itself. We ran up to $1 billion in total supply in 8 days. I believe it's the fastest growing protocol in Solana history on that side. And the user feedback has just been incredible. I think it's like 57,000 positions have been created on there, which is a multiple of what you'll see on any other borrow lend platform. And so we're really excited.
Who are you lending to? Who are you lending to? Like, so you go on there as a user, you lend your, $5K USDC or whatever it is. Who's borrowing that? Where's that going?
It'll depend a little bit on the use case. Oftentimes, it's other people who are borrowing for leverage. So the most popular product on there is called Multiply, which basically allows you to kind of juice your return. So just as like one example, we have an LST, liquid staking token called Jupe Sol. That's the highest APY of any LST on Solana. Gives you, I think today it's like 6.8%. You can borrow Sol for something approaching 5%. I might get the numbers a little bit wrong here, but there's a delta between those. And so what you can actually do is borrow Sol to get more Jupe Sol and then just loop that again and again. And right now on max leverage on Jupiter Lend, I think that'll get you about 21% APY on top of whatever price happens within Sol itself, right? And so if you're on the other side of it, you're lending your Sol, it's going to be borrowed by someone that wants to leverage up and amp up their returns typically. Other folks might be borrowing it for more straightforward use cases. We've certainly heard stories about people who just, they need a loan of $50,000. They work in crypto. It's very hard for them to get a loan from a bank, but they have a bunch of collateral. So they'll just pick out $50K and then they'll use it to pay rent and whatever else it might be. So it's a kind of diversity of folks, but certainly leverage, I think, is the number 1 use case.
Would you ever let landlords come on there and collect that way?
The good news is they don't have to. We are programmatic. We chop it up. So yeah, we will liquidate you in very small facets. We have like tiny partial liquidations. We actually make no money on liquidations, unlike some other platforms in this ecosystem. So we don't want people to get liquidated, but yeah, no landlords need apply. We'll take care of the collateral on our end.
What else besides lend? What else besides lend are you most excited about, or should we be looking at?
Again, I'm biased because these are some of the products that I'm working personally on, but we do have a stablecoin coming up. We're doing it in partnership with Athena, which is the fastest growing stablecoin, and just an incredible team. We have that coming out in Q4 as well, and that's going to actually be powering a bunch of our different products. So, for example, in the JLP pool, which is part of our Perps product, it's about a $2.1 billion asset right now. JLP is, and most people's favorite token. There's something like $700 million of stablecoins in there that we can start to gradually replace with our own stablecoin, internalize that revenue, figure out how to improve JLP yields, and a bunch of other fun stuff. So, very excited about that one. And then I guess the third one would have to be the prediction market. So we just launched prediction market in partnership with Kalshi. And just for the record, Jupiter Lend in partnership with Fluid, which is a well-known EVM team, stablecoin in partnership with Athena, prediction markets in partnership with Kalshi, right? So because we have a lot of distribution and a really high quality product team, people love to work with us, and we love to work with the best. I think prediction markets are only going to continue to kind of skyrocket up from here. The barriers to usage have been tricky, and in particular, like crypto users are, very prone to use these kind of products. And so I'm really excited about having a fully on-chain version of that. We just launched 6 new markets today, and then over the next few weeks, we're going to continuously add many, many more, and hopefully we'll have hundreds very soon.
Is there so how do you as CEO, I think like obviously you've got great builder energy, and I think that's what gets rewarded in the space naturally. Do you ever feel like you're diluted? And I mean this is like I not as a knock towards you guys, but it's just like you guys have a lot of stuff that you're doing all at the same time. How do you manage that? Do you scale back on products? Like are you going to be is anything going to be shutting down at any point out of like literally all the stuff? Because you guys have and let's just go over this really quick, because you guys have, you guys are one of the first ones to launch, I guess like stocks. Like it's like you're saying, it's not a perfect like 1-to-1, but it's pretty close. You guys are one of the first ones to launch that. You have your browser extension, you have your mobile wallet, you have your Jupiter Studio, which is kind of the launch pad. You've had perps for a really long time. Perps. I used to trade perps all the time on Jupiter. I actually didn't even know what Hyperliquid was for a long time. I was a Jupiter exclusive user, and now you're doing stablecoin. Is there anything that at some point you look at your stable products and you're like, listen, you know what? This it's just like it's not growing. We're going to remove it. We're going to cut it.
Yeah. And just for the record, to give the listeners a sense, you only named like literally, I think, less than half of the products that we actually have. I know. Like, it's an hour-long conversation to list all of them. And yeah, I think it would definitely be a concern if we operated like a traditional company. But the good news is we are a fully crypto native startup, and we approach it as such. And in particular, what really distinguishes Jupiter is the way that we have grown. We've grown largely through mergers and acquisitions, which is quite rare in this space for reasons we can talk about. But we've acquired, I think now 7 companies. And what that means is that we have a lot of, as cliched as it is to say, a lot of founder energy. So each of the products is basically, and I think this might literally be true, but almost all the products are run by either founders or CEOs. And so it's leaders only. So of the 105, 110 people that we have at Jupiter, something like 15 to 20 of them are former founders or CEOs, which I think is the highest ratio I can imagine of any team. It comes with its own complications. You get people with very strong opinions who are used to working in a position of high autonomy. And so like there are some coordination costs to be paid. But thankfully, we don't have the dilution problem, because you have Guillaume, who leads Jupiter Portfolio, which is one of our most used products. He used to run something called Sonar Watch that we acquired. He's used to just like coming up with his own roadmap, shipping it aggressively, listening to user feedback. No one needs to tell him anything about product development. He knows his business. And so that's what allows us to work and kind of scale so rapidly. And then in partnership with the additional thing is partnerships, right? When we're working with Fluid on Jupiter Lend, for example, they bring 5 to 10 years of deep expertise on DeFi borrow lend. I mean, Samyak, who's the co-founder of Fluid, invented the concept of flash loans. He was the guy. Like it was his idea. And so when we're able to partner with people who are such like deep subject matter experts, it again allows us to launch products that are high quality to high scale, like more rapidly than others.
Why do people invest in real estate? because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets.
Hold on. I pulled up your prediction market at the last second there, and then I was looking at the football game one, and I totally forgot what I was going to ask you next. No, but actually, let's talk about the prediction market one, because I do want to. We're going to do. You guys are doing the burn, so we do have to talk about that. And then I do want to. Last thing I also want to ask you about Jupiter. That's still a thing, but something like prediction market. And thanks for explaining kind of how you guys manage like all your products. Some of the prediction market very hot right now. Obviously working with Kalshi, you're going to try and tap into their volume, because it's like it's really like a 2-horse race between Kalshi and Polymarket. How does that work to partner with them? Right? Like, are they going to be sending users over to you, or are you just tapping into, you're just like rewrapping their interface? And something that's so hot like that, do you feel like you're just trying to get on top of the trend and making sure your users can access it? Do you want to keep building there? How does that work when you guys approach something like this?
Yeah, in terms of trend tracing, it's funny, right? Because in Q4, we're launching an ICO platform, a stablecoin, and a prediction market, which are arguably 3 of the hottest trends that have been around. All 3 of those have been in the process for many months before they were hot, and so on. So we're not particularly good at trend chasing, I would say, quite honestly. We're mostly kind of principled on where we think the world is going, and then we try to build it out. With Kalshi in particular, they've been great partners. Shout out to my guy, John, who everyone knows and loves. We really need them for their liquidity, their settlement liquidity, basically, right? So in standing up any market, whether it's a prediction market or a stock market or a crypto market, you need liquidity. You need money to be there, especially like to be on both sides, right? If everyone you have is voting, that Lando Norris is going to win in the prediction market or in a prediction market for the F1 championship, then the pricing gets very skewed. You need enough other people to take the other side of it for the markets to be kind of balanced and somewhat true, right? Otherwise, you see these like low volume markets where, you try to put in $100 prediction on, whatever the inflation rate is going to be. And, it skews the market by like 80%, right? And so that's the kind of problem. And that's the problem that they help solve, because they have tons of liquidity that we can settle down to. In addition, they're also just great design partners. Like, they've been really thoughtful and kind of giving us suggestions on the UX side, on the development side, and so on. But yeah, that's really where they come in, is that without their underlying liquidity, it would be hard for us to stand up a market that can actually take in real volumes and service real users.
Which one of these are you choosing out of these prediction markets?
Well, I lost a bunch on the F1 race last week, so now I feel like I should not bet against Lando. Is one thing.
Yeah,
I gotta say, I think that no on the National Bitcoin Reserve seems pretty good. It's
by the end of 2025. Yeah.
I don't really see that happening, just based on how general current. This is not financial advice, folks. And by folks, I mean LG. This is not financial advice. So don't blame me.
You saw me click on it. I was like, smash that button.
I do think there's something. That one seems like fairly sure. It'd be pretty surprising, I think, to see it there. So I think that's probably underpriced a little bit. Whatever you think of his politics, I do think that Zoran is basically a shoe-in to win. So that seems like a pretty easy one. I'd probably take Lando. Oh, Max went up a little bit. I'd probably take Lando, as much as I don't want to do that. So yeah, across those. I don't watch football since I moved out of America, but I'm sure. Right. Do you have a view on the Buffalo game?
I haven't watched it. I actually haven't watched NFL this year. Yeah, I'm too checked into crypto that I'm like, let's just focus on this. And as I told you earlier, sometimes my time investment in sports backfires. Like last night, watching the Blue Jays, play this basically 2 games in a row to then lose. I was just like, God, I have to do this 2 more. I have to do this 2 more nights in a row. It's just like exhausting. I was like, that's right. That's why I stopped spending so much time watching sports a couple years ago, because it's just like you spend all this time and your team loses. But I just to wrap it back to prediction markets, I do find it amazing how many of our guests now have opinions on prediction markets, whether they're building them or not. It is this funny thing where everybody like has something that they can kind of play with, right? And I think that's such an interesting new primitive for crypto, is that, even some of like the New York City mayor is like something I'm like, I would never, ever care about that.
Yeah.
I'm on the west side of Canada. Like, why would I don't really think about New York, but now it's always there. And it's always the top volume market on prediction markets that now I'm like, well, that is interesting. And now I start to get into my social media feed of what he's saying, what people are saying against him, all that stuff. So it is cool. I think it is like a new kind of on-chain, a new global village in a way. I find prediction a new place for us to have opinions on things that don't necessarily affect us, but that are compelling things to wager on.
I think that like things like, I fully agree. And I think things like TikTok and stuff only further accelerate, right? Because like I have opinions on the most random shit because I'm on TikTok for too long per day. And because as we move into this more algorithmically generated feed system where the content you're getting is not content that you are pulling, it's being pushed to you, you end up developing a much more multifaceted kind of opinion space of things that you actually think matter or have some kind of thoughts on. And famously, opinions are like assholes. Everyone's got one on basically every topic. And so like if you can like turn that either into like literal financial gain, or if you really understand US politics, you maybe have an edge into here. So it's like there's a whole new class of traders that are coming up. It feels a little bit like meme coins did like a year or two ago, where you're seeing all sorts of like really advanced strategies on how do you like beat the prediction market and beat the rest of the crowd. And by doing that, you're actually improving the prediction market, right? This is one of the cool things is that better high quality information improves the outcome because the job of the prediction market is to predict the future, right? And so, yeah, I think that it's a trend that's only going to continue to accelerate, especially as the form factor gets easier, as it's, more popularly accepted and so on.
So let's wrap this up, Kash, by giving what people that are going to be crazy jupe people really want to hear about right now is what is going on with this 2% burn that follows $60 million of buybacks on the Jupiter token. What's up with that?
So yeah, basically in January, we wanted to figure out ways based on community feedback to increase the alignment between Jupiter, the business, which is somewhere doing like $190-ish million annualized, and Jupiter, the token, and the token holders, right? And really what we wanted to create and were requested to create by the community was this positive flywheel where if you were a token holder, you had reason to go out and evangelize the products and that there would be some kind of like tangible connection between the product succeeding and you as a token holder succeeding. And so we announced what we called the Jupe accumulation plan, where 50% of Jupiter's on-chain revenues were sent to this third party called the Litterbox Trust, which then programmatically purchases Jupe on the open market. And so we've been doing that. I think we announced that in January. I think we started doing it in February or March or so. And so we've accumulated quite a bit of tokens because we've had a good year from a business perspective. The original plan was, let's start doing this for the next 2 years. We'll come back to the DAO. We'll figure out what to do with it in 2 years' time. But over the course of the last 6-7 months, what we've learned from a lot of token holders is, hey, this is actually bad to just like have these kind of hanging over everyone's head without a clear use case or clear sense of what's going to happen. It's actually preventing us from increasing our positions, shilling it to others, or really just having that sense of confidence that we know what's going to happen with this project. In general, one of the lessons that I continuously learn is that markets abhor uncertainty, right? Like what they want is to know what's going to happen next. And so delivering that certainty became really important to us. So on Thursday, we're going to be launching a vote to the Jupiter DAO to say, hey, we have 129 million tokens in the litter box right now, something of that nature. It's something on the order of $50-60 million worth of tokens. Should we burn these or not? They've already been purchased back. What should we do with them? My hunch is based on a lot of initial conversation on the discussion forums, I think that vote's going to pass, but we'll see. There's other ideas that are out there and people might want to push their own things. Then later on, we'll have a second vote, which will be, what do we do with the ongoing 50% of revenues that we allocated to the Litterbox Trust? Should it keep buying back these tokens? Should it just go towards product growth and we should use it for incentives and the other things? Are there other kind of like conservative, like should we, there's a pretty wide design space on what to do with that amount of revenue that best benefits the Jupiverse, right? And that'll be a second vote that'll come up probably later in November.
How do you balance like the incentive design for stuff like that? Because obviously, if you're going to leave it up to your community and their token holders, naturally they're going to want to see those tokens disappear because that'll be really good for price action. But for you guys, you're building a product, you need to be realistic, and you can only tie what you're doing in your revenue so much to your token as well, right? So how do you guys manage that?
It is a difficult balance. I will say we are lucky to have people like you as part of the community. And so a lot of our users tend to be kind of DeFi power users who are a little bit more thoughtful than your average holder of, I maybe shouldn't slander any particular project, but we have we have a good cohort, especially our larger holders are very thoughtful kind of DeFi users. And so they tend to be less burn everything. Certainly the smaller guys or the newer guys or people who are a little bit less sophisticated or less experienced, let's say, on chain. Those ones it's more of a thing where they'll be like, just merge Jupe and JLP, which is like functionally impossible. Or they'll be like, give us 100% of revenues. It's like, bro, I mean, we got a team we got to pay for, there are real operating costs. So
that's the guy with $200 worth of Jupe tokens. It's like, come on, I got to double my $200.
And which, by the way, nothing but love for those guys, but you hope that people would over time kind of have a sense of the bigger picture. And in fairness, it's incumbent upon us to kind of drive that education, drive that conversation forward. And so, it is at the end of the day a balancing act. There's no magic way to get through it. I would say I talked about curation a little bit here, but the biggest advice that I give to new founders who are launching tokens is you want to treat your token like it's art. If LG or me, we wanted to go buy, a Picasso, you can't just go buy a Picasso, right? You have to go talk to an art dealer. They'll be like, okay, well, what else is in your collection? What is your plan? Where are you going to show this? You have to pass the due diligence in a way. And the reason that they do that is they don't want you just buying the Picasso and flipping it and hurting the market or whatever else. Similarly with token holders, you want to find people who are actually aligned with the long-term vision, right? Famously, Meow, who's the co-founder of Jupiter, is not going to get a single token of Jupe until 2030, right? The company started in 2021. That's 9 years he's going to work on it without having any kind of payday. Unheard of in this industry. People who appreciate the seriousness and the commitment that we have, that this is not like your regular crypto project where, we're selling on secondaries and buying and flipping and all that kind of stuff. Those are the kind of people that we want to draw in. And the more that we draw those people in, the easier it gets to balance those incentives across.
I think you're wrapping up this interview with probably the best metaphor you've used yet, which is treat your token like an art, like it's art. I love that. Yeah. Kash, dude, we'll wrap up there. Thank you so much for explaining all that and giving us some of that insight into Jupiter and of course for your views and your general bullishness on the industry. We're lucky to have great builders like you guys. Guys, you can find Kash at Kash Dhanda on X. Pretty easy to find, pretty prominent. And thank you, everybody, Milk Road listeners. We wouldn't be here without you guys. We have a lot of other great interviews coming this week, so make sure you guys tune in for those. Kash, thank you, man.
Appreciate it, man. Thanks for having me on.
If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.